Hi, my name is Coco, and today we're going to learn how to price our products and our goods for profit in our business. So the first thing we are going to be looking at are the five things that determines our prices. Number one is your product quality. How good is your product? Do they deliver on the promises that they ought to deliver on? Do they give the customers maximum satisfaction? Will your customer get value for their money? How good is the fabric that was used in creating the product? How good are the materials and the components used in creating that product? These are what goes into quality control, and these are what attracts well-paying customers towards our business and our product. You can't sell a bad quality or a shitty quality product and expect people to pay you good prices for it. And you can't just slap a premium price on a product that isn't of good quality and expect people to be happy. One thing you should focus on in your business are return customers. Good quality products, good quality designs, good quality goods always bring return customers. So with that, we go over to number two. For number two, we have our revenue goals. How much do you desire to make in a month or at the end of each month? This will decide or give you an insight into how you will price your product. You can desire to make, let's say, $1,000 at the end of the month and price your product at 0.99 cents. Or you don't expect to make 100,000 naira per month and price your product at 200 naira for each product you're selling. So take a look at your products, take a look at your prices, and take a look at your revenue goals. They are directly correlated. So when you have your revenue goals in check, let's say, okay, this month I want to make 100K. Right? If you want to make 100K, look at the products you have and decide how many pieces of those products you have to sell to make your revenue goals achievable. Look at how much you need to put these prices, how much you need to set your prices on for you to hit your revenue goal. If you are a designer like myself or you're into handmade product, that is, you make your product by yourself from the scratch, you need to determine how much product do you need to make per month that will give you your desired revenue goal. Is it 100 pieces? Is it 50 pieces? That when you sell, you know that you're going to hit that revenue goal with the right pricing that we're going to learn in this video later on. Next on is your inventory size. This is the availability of goods or products that you have on ground that you want to sell. There are some products that come in very limited quantity, and this determines how you set the prices because you can pass it off as something exclusive, something rare, and you can easily put a premium price on it if it is of good quality, please. Then if you have lots of these goods on ground, let's say 200 pieces or 100 pieces or 50 pieces, you can also determine how to price them. It also affects your pricing because your expenses and every other cost can be spread across this number of products, and this will result in a relatively cheaper prices, and we're going to see that moving on in this video and in the other series. Number four, we have our audience. These are your specific and desired customers. These are the people that are going to give you the money. These are your money makers. They determine how you set your prices also. There is no sense, or it makes no sense, to sell a car to a 5-year-old, right? So it is best for you to determine if what you are selling, the people you are selling to can pay for them, they can afford them. So you need to know who you are targeting. Who are these specific individuals, not random people? You need to know their income level, their spending habits, their purchasing behavior. How much are they willing to spend on something that you're selling? If it's a dress, how much are they willing to spend on a dress, right? There are some people, they can't spend above $100. They can spend above 20,000 naira on an outfit. While we have some customers that feel that's too cheap, like really cheap, and they can spend as high as $200. They can spend as high as even $1,000 on an outfit, or even over 80,000, 100,000 naira on an outfit. So it's left for us now to determine who are we going to target. Who is the right fit for this product? Who is the right fit for this design? Who is the right fit for this goods I'm trying to create? It is not proper if you just create a product and people are not buying it, or people don't see the need to buy it. So we need to have the specific people in mind, and we need to know how they buy things. We need to know their purchasing behavior. We need to know how much they're willing to spend on a product, and how much they're willing to spend on not just the product, but for a product like yours. All right. For number 5, we have your competitors. Your competitors ought to be your best friend and not your enemies in business, especially those who were in the industry way before you. There are a lot of things to learn from them if you pay close attention. Number one thing to learn from them are your pricing. It is very okay to observe how your competitors price their product, because this gives you an idea into industry standard and into what it feels like to set your prices or to sell your goods at a particular price. Let's say a company or a particular competitor of yours sells at a premium price. What does this tell you? It tells you that people are willing to pay that price high. For me, I don't advise anyone to price low at all. So if you're looking at a competitor, I want you to see it as an opportunity to grow, as an opportunity to reach and aim for things that are bigger than your mind or where you are right now. If someone, or if a customer is paying that competitor that money, they can also pay you too. Moving on, we are going to be looking at the common mistakes entrepreneurs make when it comes to pricing and in business. Number one is ignoring your business expenses. This is a very costly mistake. Your business does not run itself. It takes a lot. It takes a lot of expenses, a lot of monetary input for a business to run successfully. And no matter how small you are, your business still incurs billings. And you need to account for this in your pricing. Because when you don't, you end up paying for a lot of things out of your pocket, and you're hurting your business because there is no profit and there is no cash flow, which is very important in business. So always account for all of your expenses, and we're going to talk about that. Number 2, fear of what will people say. And this is a plague that affects a lot of small business owner or new entrepreneurs. They are scared because they are new in business, and they tend to, look down on themselves and think nobody will pay them if the price well, or if they actually price their goods at the rate they actually want to price it. You find out that some business owners tend to devalue their price or drop their prices just to appeal to people, because they are scared and they are confused or in doubt that nobody is going to pay them. I'm here to tell you that that isn't true. That is not true. I have purchased from a lot of new businesses at their rates. I'm telling you this for sure, for a certain. I have purchased from new businesses at their own rate. So don't be scared of what will people say. That's why in the first video we talked about our audience. When you have the right product for the right audience at the right price, there will be no issue with people paying you your rates. Do you understand? That's why I placed that video or that aspect before this one, because your audience determines who pay you. And when you are selling to the right people, selling is very easy. Making sales is easy when you are selling to the right audience who have the capacity to pay. Number 3, we have lack of self-value. I see a lot of business owners who have good quality products, but they lack this self-confidence and this self-value. They don't know what they have. It's like they don't know what they bring to the table, and this is hurting their bottom line really bad. This is hurting their business really, really bad. Please, as a business owner, either you buy your goods or you make it from scratch, please have confidence in yourself. Have confidence in your product. I'm telling you, it's going to reflect in how you set your prices and how customers perceive you. Business and selling is all about perception. It is what people see. The energy you give off is what they are going to respond. Do you understand? So please, when you have experience and you have value, please do not hesitate to show it. For number 4, copying your competitors exactly. Observing your competitors' pricing and copying exactly their pricing are two different things. You observe to know the industry standard, you observe to know what the market is willing to pay, and you observe to know the quality of markets that are already serviced by your products or with your goods. Copying them exactly can be very fatal to your business, very, very fatal to your business, because their customers are not your customers, their audience are not your audience. Okay, you can be copying the wrong price for your audience. It is just a roadmap for you to know what the industry is, or how the industry is being set or is set, and you should also know what people are willing to pay. Let's say your competitor has a particular outfit or a particular goods for 500. What makes you think you can price your own at 800 naira? Because if people can pay 500 with the right positioning, people can pay you more. Okay? Now, we are going to be looking at two factors to consider when setting your prices. Number 1 is your monthly expenses. Like I told you, you have overhead, which is also or can be passed for operational expenses. These your monthly expenses includes your rent, it includes your light bill, it includes your water bill, it includes your warehouse bill, it includes your logistics, it includes your employee fees, it includes salary of your employees, it includes a lot of things. And if you don't put this into consideration, you are going to be hurting your business. It includes your phone bills for your business, it includes stationaries, it includes equipment, it includes your machines, your tools, it includes your tables, it includes your internet. Even your marketing and advertising ought to be in your monthly expenses, and it ought to be accounted for. Then number 2, we have the cost of goods. What did it cost you? How much did it cost you to purchase a particular product? Or if you're making from scratch like myself, how much did it cost you to buy the materials to make that particular product? Your fabrics, your lining, everything, your zips. What was the cost to get that product? Lastly, we have wages and labor. This is also known as salary. As a business owner, especially small business owner, you ought to be paying yourself salary. The money that comes into your business is not for you to lavish or for you to just use as you please. No, you need to have a specified amount that you are giving to yourself every month for your input into your business. You are an employee of your business, no matter how small your business is. So now what I want you to do is, if you are to employ someone, how much will the person take? Look at the industry and know the minimum wage or the minimum amount employees are collecting for doing a job in your kind of business. Since you are a business owner, like a one-man business, you are an employee of your business, you are working for your business, and you ought to be paid. Because when you start putting your hand into money that comes into your business, there is problem. So please have a specified amount that you give yourself every month as a business owner for your salary. Moving on to the business of the day. We are going to learn how to price our product in 3 simple steps. So number 1, I want you to get your cost of goods. That is what it costs you to make or to get a particular product. This includes your materials, your transportation, your pins, your thread, your scissors, your containers, your packaging materials, everything it took you to make that product, that single particular product. Those are your cost, or that is your cost of goods. And also your expenses. This is your rent, your light bill, your water bill, your phone bill, your internet bill, all right, your stationaries, your salary, your employees, if you have workers, your employee salaries. All right, these are your expenses, your operational and overhead expenses. Then also your desired markup. your markup is an increase in percentage. Your markup is an increase. You wish to up the cost of goods by. Okay, so when you have your cost of goods and you have your expenses together, you can decide to mark up by 20%, 50%, 30%, or even 100% to get your selling price. And that is where we are getting to. So it determines how high you want to go or how high you're comfortable with marking up. When it comes to marking up, preferably I don't advise anyone to mark up below 50% of your cost of goods and your expenses put together. So here I just have hypothetical numbers here to just give us an insight into what we are doing. So let's say I am making an outfit, a dress. I bought my materials, I bought my zippers, I bought my lining, I bought my packaging materials, I bought my buttons, I bought my thread. Everything cost me $600 or Naira. So let's agree that my cost of goods amounted to $600 or Naira, as the case may be. Then for my expenses, which consist of my rent, my light bill, my water bill, my utility bill, which has to do with your waste or your dirt, then my internet bill, my phone bills, my marketing and advertising bills. So let's assume every of that accounted to $250 or Naira. These are my cost of goods and my expenses per month. Your expenses are the things you use in running your business on a monthly basis. So in a month, how much light bill do I use? In a month, how much water bill do I use? In a month, how much is my salary? In a month, how much are my employees' salary? In a month, how much internet bill do I use? In a month, how much phone bill do I use? In a month, how much does logistics cost me? These are the things you put together to give your expenses or to come up with your expenses. In a month, how much is your rent? How much do you pay for your rent? Okay, so my cost of goods and my expenses amounted to 600 and 250 respectively. So I'm going to add up 600 plus 250. It will give me 850. 600 plus 250 will give me 850. Please, I want you to be looking at the arrows I created for you to follow. Okay, then after we have that, we are going to mark up. Now we have our cost of goods and we have our expenses put together. Okay, now I want to explain something for these expenses. Let's say you have 50 pieces of outfits, 50 pieces of products to sell. Okay, you have 50 pieces and our expenses for the month is $250 or Naira. You are going to divide the 50 pieces of goods you have on ground by the $250 or Naira expenses you came up with. All right, so you are going to share this monthly expenses on all the 50 pieces each and allocate price for each of those pieces. But in this case, we are dealing with one piece and we're going to be using everything we use in the month, all our expenses in the month, to get our expenses figure. So now I have 600 Naira or dollars for my cost of goods and $250 or Naira for my expenses. I just want to clarify that. So let's say after dividing our 250, I want to clarify this for people that have multiple goods and multiple products to sell per time. Let's say we have 50 pieces of products to sell and our monthly expenses for the month is 250. We are going to divide that 250 by 50. Let's assume that we now have $5 or 5 Naira. So each outfit or each particular product is going to carry 5 Naira of our monthly expenses. So we are allocating this monthly expenses to all the products. We are spreading it across. But since we have one outfit, we are just going to use the entire monthly expenses, which is 250 for this particular outfit. And with the cost of goods and these expenses, we came to 850. Then after 850, we are going to mark up. And I decided for this video to mark up by 75%. Remember, I told you that you should have at least 50% more than your cost of goods and your expenses put together, not lower than 50%. I really do not advise it. So I went up by 75%. I want you to pay close attention to the calculation here. Remember, I told you that your markup is in percentage and we use 75%, right? And in percent, you divide over 100. So we have 75 over 100 times 850, which is the addition of our cost of goods plus our expenses. So now we have 75 over 100 times 850. Now we're going to divide. You are going to take one zero and cancel out the other zero on the 850. Then the remaining 10, you're going to divide 10 by 85, and we got 8.5. The 75 and the 8.5, we are going to multiply together, and we arrived at $637.5 or naira. Now, to get our selling price, which is the bone of contention here, it's just a simple formula of cost of goods plus expenses plus your markup, your final markup. So my cost of goods plus my expenses gave us 850, like we know, plus this recent markup after our division and multiplication, we got 637.5, and altogether we arrived at 1,487.5, or approximately 1,488. With this figure that we arrived at, you have accounted for your business expenses, for your rent, for your light bill, for your salary, for everything, and you will still have enough extra for profit to enjoy yourself, to do other things, and a lot of cash flow is coming into the business. You are not in debt, you are not paying for things out of your pocket, and everything is going on smoothly. This is the simplest and the most basic way to get your selling price. Always make sure you know your accurate cost of goods and also your accurate expenses you use in running your business for a month. Then you desire your markup. Thank you for watching.